Brr, is it cold outside? But we've got some hot topics on this Issues Watch podcast. Hello and welcome to the Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, the views and statements expressed herein are my own and not necessarily those of the NJCPA or CLA. Okay, so let's talk about some topics today. Just yesterday in my office, one of my managers said to me, "Can you please stop with all the new accounting stuff?" And I said, well, actually the FASB hasn't come out with anything real significant. And they said, really? I said, well, we had RevRec 606 and leases, the 842, and now we have CECL, that if you're working on financial statements for 1231, you have to consider CECL, current expected credit losses. Frank and I have covered it extensively over the past 2 years. If you need to find out information about that, go look at our past episodes or look at other trainings that you can find relating to CECL. What the FASB did come out with recently, though, is a proposed ASU. So it's an exposure draft. You shouldn't just turn off and not think about it, but you should just know what's out there. It's a proposed ASU, debt with conversion and other options. Now, a lot of people hear, oh, convertible debt, I don't have to listen because it's public companies. No, it doesn't only relate to public companies. I see a lot of convertible debt in private companies, particularly in the technology or the life sciences sector. So you should always watch out for this. People always trying to come up with some, different type of features. And this proposed guidance, I'm really summarizing what they said in there, was to clarify the requirements for determining whether certain settlements of convertible debt instruments should be accounted for as an inducement conversion. Really summarize it there for you. If you do have convertible debt, if you work with clients that have convertible debt, you should look at it, just know what they have out there. They're looking for comments now. I'm sure when it comes out, I will be reporting on that ASU. Okay, we're leaving that FASB already, and we're going to the AICPA. The PEAC, the Professional Ethics Executive Committee, okay, they oversee and they issue the guidance as it relates to ethics, for the AICPA. They issued guidance on the definition of publicly traded entity and a public interest entity. A publicly traded entity is an entity that issues financial instruments that are transferable or traded through a publicly accessible market mechanism, including through listing on a stock exchange. Kind of what you expected. When an entity is required to file a registration statement with the SEC, the entity is considered a publicly traded entity, and they'd effectively become a publicly traded entity. So you just keep that in mind, but then you also have the public interest entity. And that's where certain companies could get pulled into this, and when you're listed as a publicly traded, of course, but public interest entity, you now have to account for things differently. The AICPA, the FASB comes out with guidance and says, okay, public entities can have to report it this way, and non-public entities can report it this way. I talked about it last time or recently when I had about tax disclosures. There were different levels of reporting. So if you fall into this category, you have to watch out for that. So a public interest entity is an entity when it falls into the following, one of the following categories, not all, one. A publicly traded entity whose auditor is subject to provision of regulations of SX SEC Rule 2-01. So while you may not think that you're a public entity or a public interest entity, if your auditor is getting pulled into it in some way, you could be deemed a public interest entity. So I'm not saying that all of a sudden, whoa, I got to talk to my auditor because they're registered with the PCOB. That doesn't mean it right there. But watch for that. An entity whose main function is to take deposits from the public that meets the annual audit requirement imposed by Part 363 of FDIC's regulation such and such. It goes into detail of that regulation. So if you're taking deposits from the public and you fall under some FDIC regulations, that could fit to you too. That also has consolidated net, total assets of $1 billion or more at the beginning of the fiscal year. An entity whose main function is to provide insurance to the public, and then meets two other criteria, that is subject to National Association of Insurance Commissioners' annual financial reporting model regulation rule. That has $500 million or more in annual direct written and assumed premiums. Okay, so if you're in the insurance industry, you could fall under this too. And the last area, an investment company other than an insurance company product that is registered with the SEC pursuant to Investment Company Act 1940 and the Securities Act of 1933. That could pull a lot of companies in. So what we found out when I was with Sobelco, we used to audit broker-dealers. We don't audit broker-dealers anymore. We used to audit broker-dealers, and all of a sudden we realized that they were a public interest entity or a public entity at the time, and all the disclosures we thought we didn't have to do because they were private, they didn't have a registered stock or anything, we realized, we have to adopt the pronouncements early a lot of times. There's certain disclosures that's required, particularly as it came in with revenue recognition. Now, broker-dealers weren't as affected by 606 for the most part, except for those that were M&A broker-dealers, but it did affect us, so we had to watch out for that. For you auditors, when a member performs a financial statement audit subject to regulatory requirements that I described above, the member should comply with the applicable independence requirements required by governmental bodies, commissions, or other regulatory agencies. So what the peak is saying here, remember the peak is by the AICPA. This issue, the ethics, which covers independence, as it relates to AICPA members, which you usually have to follow when you're doing audits. But if you're falling under the publicly traded entities or the public interest entities, you have to follow the independence requirements as set forth by SEC, PCAOB as examples. So keep that in mind. Okay, on to a topic you usually don't hear me talk about, GASB. I don't only want to talk about FASB or PCAOB or SEC. We have a lot of members that are in a lot of different areas. You have Bowman, you have NJCPA. Those are firms that audit municipalities. We have members, a lot of members that work for municipalities. I see them on the ethics trainings that we do. So I want to make sure they hear this information. So, and there might be a question if you're taking this for CPE too, as it relates to this. So GASB came out with Statement 102, Certain Risks and Disclosures. It requires a government to assess whether a concentration or a constraint makes the primary government reporting unit or other reporting units that report a liability for revenue debt vulnerable to risk of substantial impact. It requires a government to assess whether events associated with a concentration or constraint that could cause a substantial impact have occurred, have begun to occur, or more likely than not to begin to occur within 12 months of the date the financial statements are to be issued. With that, you can imagine, now that they said you've got to check to see if you have these constraints, these concentrations or constraints, you have to make sure, if you have them, you have to have disclosures. So what's required for the disclosures is you have to disclose the concentration or the constraint, each event associated with the concentration or constraint that could cause a substantial impact if the event had occurred or had begun to occur prior to the issuance of the financial statements. Now, what I found interesting there is they don't say what could occur if it's going to happen in the next 12 months. I'm happy they didn't say that because you'd hate to have governance or management of these governmental agencies sitting there projecting what they think may occur. And then you have to disclose the actions to be taken by the government prior to the issuance of the financial statements to mitigate the risk. So all those that are sitting there going, I'm not in government, I don't deal with government, I don't care about this, is very similar to going concern. Now, this is not going concern. That's not what I'm trying to insinuate here. But this is very similar to that. You know, what are the events? What what that have occurred, what can occur, and also what is management's plan to mitigate the risk. Okay, one last thing I wanted to bring up real quick. I found this literally just this morning. The FASB. Who? Not the FASB, the FASB. The Federal Accounting Standards Advisory Board. They released an annual handbook. It was delayed, but they released an annual handbook, published the latest body of accounting concepts and standards for the U.S. government. So I found it interesting. I haven't gone through it. I haven't downloaded it to look at it yet. But it took a while, and it summarizes all the pronouncements that have come out lately as it relates to the government. And they say in here the nearly 29-page document is downloadable. So if you have a lot of time on your hands and you want to read something, some light reading, it's 2,900 pages, download it, look over it. But I'm sure it's very interesting, especially if you deal in the governmental spectrum. So those are the big items I wanted to cover today. In closing, I'm happy to announce that the Society's New Jersey Law and Ethics course has been approved for the triennial. Yes! Thank you, Jim Hardenberg, for all your hard work on that and the rest of the team. Watch njcpa.org/ethics for the schedule of ethics webinars, and you can also take in person at the NJCPA Convention and Expo in Atlantic City this June. Visit njcpa.org/convention for more details. Lastly, be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening and enduring my cold, but it didn't affect these arms.